Gold prices have risen nicely this year, but does market history suggest those expecting further gains will be badly disappointed? Joining us now is Kitco Senior Technical Analyst Jim Wyckoff. Jim, is it time to take profits in gold here?
Danielle, I don't think so. The near-term price trend is still up on the daily chart for gold. We have seen a corrective profit-taking pullback, but from a technical perspective, this is just backing and filling on the chart. In fact, if the gold market would have continued to shoot higher without some kind of a correction like we're seeing now, that would have been an indication of an impending market top. But the fact that we're seeing some backing and filling, some consolidation, that's actually a good thing if you're a bull.
Now, Jim, one technician I spoke to pointed out that gold's recent run-up has similarities to 1999, when gold rose powerfully in a short period of time to break out of a period of progressively lower prices. Do you agree? Do you expect mild gains at best for the rest of the year here?
You know, that's a tough call. I tend to look at the longer term and shorter term perspective, and the shorter term perspective for gold right now is still firmly bullish. Looking at the longer term weekly and monthly charts, certainly there's some more work to be done for the bulls to get that longer term technical picture looking more bullish. But this is very important, Daniela. I'm looking at other markets in the raw commodity sector in general, and it's my impression that the raw commodity sector bust cycle has ended or is very close to ending. Remember that the most bearish times for any market is at the very bottom. It seems to me that we have seen a lot of bearish elements talked about in the raw commodity sector, especially the crude oil market, yet the crude oil market has rallied. The gold market has rallied, even though naysayers said that prices were, headed still lower. These are all early bullish technical clues and psychological clues that the raw commodity sector has turned. And history shows that boom and bust cycles in the raw commodity sector occur and end on short notice.
All valid points, Jim. Now let's get your thoughts on the FOMC here, which wraps Wednesday. The marketplace believes there's a 50-50 chance the Fed will raise interest rates in June. What say you, Jim Wyckoff?
Well, Daniela, I guess I'm kind of sitting on the fence also. We've had some better U.S. economic data recently. If that trend continues, if we continue to see strong employment numbers, I think you'll probably see the Fed make a small rate hike in June or shortly thereafter. However, I also sense that if we continue to see the crude oil prices rebound and see other commodities like gold rebound, you may see less focus on the day-to-day machinations of the Fed funds rate futures or the overall influence of the Federal Reserve on market prices.
All right, Jim, let's wrap now with your Wyckoff market rating for the week. A little more optimistic on gold and silver here. What levels are you looking at?
Danielle, I'm giving June COMEX gold futures a 6.5 market rating. Wyckoff's market rating, that's in the bullish camp. I backed it off a little bit recently because of the profit taking, but still firmly in the bullish camp. Looking at silver, I'm giving it a May silver futures is a 5.0 Wyckoff's market rating. That's in the neutral camp. That's just choppy sideways price action. Neither the bulls nor the bears are gaining much of an advantage on a short-term basis. Looking at support and resistance levels for June gold, we've got support at 1,200. We've got overhead resistance at this week's high of $1261.90. Looking at May silver, we've got support at $15 and resistance at $16.
Thanks so much, Jim.
Thank you, Danielle. I can't wait till next time. Bye-bye.
And thank you for watching. Stay tuned as we look at the fundamental picture for gold with Kitco's Trading Director Peter Hugg up next.